Hello, welcome to the Quality Mortgage Services YouTube channel. Today is November 17th, and we're going to discuss the press release that just came out from the FHA regarding the annual finance status report to Congress. And as you know, over the last few years, the MMIF has been in question whether the sovereignty of be able to securitize those loans in the FHA mortgage insurance program. So there's reference into the press release regarding the fund. It's referring to the MMIF. So here we go. The fund gained nearly $6 billion in value over the last year and now stands at $4.8 billion. The current capital ratio is 41%. Improvement in the fund is the result of aggressive policy actions that have led to better portfolio performance, including delinquency rates dropping 14% and recovery rates improving by 16% since last year. I would also congratulate the lenders out there who made their own lending templates and assumed risk in order to help improve these statistics. Not sure if it's all the FHA, but just collaborative, if you will, across the board with the mortgage banking industry by just restricting credit. Okay, so here's a quote by HUD Secretary. This year's report shows that the fundamentals of the fund are strong. Over the past 5 years, FHA has taken on a number of prudent actions to restore the fund's physical health. This is positive news in the economy and the millions of American families that count on FHA. Well, that's true. A lot of people count on it, but I would say that we need to look at how we're going to get the first-time home buyer market back up. Okay, when you look at, there's been improvement in all these numbers. There's also appears to be maybe a decrease in some other areas in getting credit to certain people out there. Not saying it based on discrimination or anything like that, just a result of society trends and changes in the way people consider housing or maybe what they value. So if someone has high education debt and paying high rent, then they are probably putting themselves out of the marketplace. But that's a whole different discussion later. So following the housing crisis, the FHA took a number of steps, including changes in underwriting standards, loss mitigation policies, recovery strategies, and premium levels. And basically that's what has resulted in the success today. And I would agree. Yeah, I think that they had to kind of reinvent themselves. So good work, the FHA. Here's some other information. Improving the performance of the fund by $21 billion in 2 years is good news for the housing market, says the acting commissioner. FHA will continue to focus on meeting its mission of creating responsible access, not reasonable, but responsible access, investing in our economy and preserving pathways to the middle class. I don't know how you define that, but okay. So then it goes on to continue. We remain dedicated to giving more hardworking, responsible families the chance to buy a home and not a returning to the days of reckless lending that caused so much pain for the middle class families in the economy. I'm not aware of the FHA making bad loans during the subprime market. I remember when the subprime crashed that people began to declare that the FHA was the new subprime loan. And as far as I remember, the FHA stayed true to its underwriting practices at that time and were not making no income, no asset type of deal. NINAs, some people call them liar loans, but just subprime high-risk loans. So not aware of the FHA participating in that kind of lending. If I'm wrong, so I'm sure someone will let me know, but I would invite being corrected in that situation. Across the numbers of measures, the portfolio has seen significant improvements, including $40 billion in available cash reserves, $10 billion in additional economic value added each year. Okay, I would need a little more information on that one. 30% drop in serious delinquent rates. 68% improvement in recovery rates, 63% reduction in foreclosure starts, and 85% drop in early payment defaults. I would also say that I think those numbers kind of line up with other people out there as well. Some of the statistics I've seen coming in from CoreLogic and some of the other people have analytics out there dealing with foreclosure starts and early payment defaults and things like that. We'll see. But also, I think that the lenders having their templates over the FHA has helped improve that portfolio as well. And just banks making tough decisions on who they're going to lend to and not lend to has helped the FHA in that. So anyway, as you can tell, the FHA is on a rebound. I congratulate them for all their hard work and their prudence in focusing in on that. I would say this, the next challenge is, okay, you've got a great lending product out there. I had an FHA loan one time in my life, and I would say, actually I built my first house on an FHA loan, not VA. I would say, what do we do as an industry, what do we do as an agency to focus in on the first-time home buyers now in that demographic of area in order to improve the volume that's out there and making credit available without reckless lending. So that's a challenge that we have to face, and only the policymakers can make that. And then obviously the mortgage banks out there who actually have the risk in the game and that and accountability will have to play along and agree. So thank you very much for attending this. I hope this was informational for you and you enjoyed the information. Hope you check us out soon. Take care.